here in South Africa. We're joined now live by Hubert Danso, CEO and Chairman of Africa Investor. Hubert, thank you very much indeed for your time. I guess, is it all about this boost of post-Brexit fortunes?
Well, I think it's actually pre-Brexit reality, and I think that's because the continent is really being able to demonstrate itself as a very viable and major trading opportunity for global investment partners. I think whilst we talk about Prime Minister Theresa May, we also have to recognize that we've just seen a major BRICS summit here. Yeah. We're seeing Angela Merkel coming to the continent. We're seeing the Macron and a number of the other leaders from around the world really patronizing the continent and looking for stronger and deeper partnerships. So I think there has been some degree of criticism leveled at the Prime Minister for not actually prioritizing Africa much earlier in her term. So
is that why you say they're patronizing Africa?
Well, I think, look, the continent is going to become the largest trade bloc through the Continental Free Trade Area. 1.2 billion people as a market opportunity, 3.4 trillion US dollars in terms of collective GDP. I mean, and this is where the growth is at a time where the globe is regressing in terms of returns. So you cannot ignore the continent, and the continent is making a lot of important and practical economic steps in the right direction.
And you see America being seemingly insular, having this insular approach. You see China very much active in Africa. So I guess Africa is very attractive to Britain at this stage.
Oh, absolutely. I mean, Theresa May's under increasing pressure from the Eurosceptics within her own party. She's got to come back with a very solid post-Brexit reality in terms of trading relations. I mean, what better to come back with than I've just struck a deal, a potential deal with the largest free trade area on the globe.
What's in it for South Africa? We see the UK, South Africa's sixth largest global trading partner in 2017. The total trade was about 79.5 billion rand. Is that likely to increase post-Brexit?
Well, I mean, we would all hope that it would increase post-Brexit, but it's all determining what we do pre-Brexit. I mean, just in terms of the breakup. Now, if you look at the opportunities there's a lot of industrialization type opportunities for South Africa to benefit from. But again, it comes on the back of how we negotiate our position. Now, I was a little bit disappointed when I saw the makeup of the delegation. It seems the sort of the usual suspects, the FMCG players, the financial services in terms of Standard Chartered, and the rest of it. Now, they all have a very meaningful contribution to make. Of course, you see the likes of CDC, which is more of a development finance, private equity player. But there's a great absence of the pension funds. And, if you look at the UK alone, it's one of the largest pension fund markets in all of Europe. Nearly half of the pension fund assets in all of Europe actually reside in the UK, about 3 trillion US dollars. Now, we believe that that's where a lot of the growth in the long-term patient capital that can really catalyze the type of industrial development that can give us the manufacturing base and the industrialization that we really need. So we think that we've come from aid to trade. We've moved from trade to investment, but we think that last pinnacle has really got to be to change the dynamic, and President Ramaphosa, we understand, really appreciates this, to move to have much stronger relationships with the pension funds in the UK and in Europe and around the world, paired with our own pension funds in South Africa and across the continent. We think that's where the difference will be made.
Let's talk about this relationship. This visit is also to cement this relationship between South Africa and Britain. Take us back. Tell us about this relationship. What do we know? How has it benefited us over the years? And is it reciprocal in terms of trade?
Well, I think it's reciprocal in terms of capital flows. Naturally, on the capital market side, there's a very strong relationship between the Johannesburg Stock Exchange and the London Stock Exchange. You also appreciate that not only has Britain been a major private equity and infrastructure investor on the continent, but also South Africa has great exposure to Britain. So the interesting dynamic here is that everyone's sort of coming at this relationship from the same position of power, if you like. So I think the real question is going to be, to what extent today can we begin to look at what the future should be economically and how we can actually catalyze that future. And I think that Great Britain really see South Africa as that key into the rest of the continent. And I think the question is really going to be, how can South Africa use the relationship with the UK to consolidate and strengthen its capacity to help industrialize the rest of the continent. Don't forget, I mean, we look at the continent in terms of overseas development assistance. Now, we actually, in terms of import substitution, export a lot of our growth opportunities by exporting raw materials. So, I mean, in terms of the goods that we import, we probably pay about $30 billion each year for the same goods that we've exported into Europe and other parts of the world. We need to correct that. And I think by having a different tone and a different sort of compact of institutional investment partners and industrialists, I believe that we can really change the fortunes there.
She's also visiting Nigeria as well as Kenya. Kenya in particular, well, we know that President Uhuru Kenyatta is in the United States, so he's got a very important diplomatic week ahead of him, isn't it?
Yeah, no, absolutely. Very important opportunity for President Kenyatta to do the US step and then, of course, meet Prime Minister May. But I think they've got a lot of industrial issues that they need to be able to protect in terms of the horticulture and the floriculture and a lot of the exports into the UK, because if the post-Brexit deal doesn't happen, obviously there's going to be a recession. I mean, I think every single report that's come to the market has predicted that. So that's really going to have a very negative impact on all of us in terms of, you know, our exports from the continent into the UK. You know, the remittances that will be coming back will be also affected. Our investments will get lower returns. So it's really important that we can help bolster each other. You know, I think you may have noted some of the comments that came from the Prime Minister ahead of the trip, that, you know, she really wants to try to change the relationship to be able to act as a counter to some of this migration and immigration issues. Well, we also have the same concern. We believe that a prosperous Europe and a prosperous UK is in our interest as much as Prime Minister May believes that a prosperous Africa is in the interest of the UK and Europe.
Well, she's taking a bit of stick back home, isn't it, with regards to Brexit? There's a certain section of society that's calling for another referendum. How's that affected? How's those tensions back home in Britain affected the financial markets?
Very scattish, you know, business. We like to understand what the future, you know, has in store for us. Right now, there's a great deal of uncertainty, which is why it's very important that we have some very practical, transactional relationships and partnerships that come out of this trip. So everyone's going to be looking very closely at that. But she's dealing with you know, a very strong Eurosceptic faction within our own party, and that could really result in a no Brexit deal as a real possibility. We all sort of hope that it won't get to that point and the market sort of, you know, the bottom falls out, but it's a real possibility. And I think even the Chancellor came out last week in the UK saying that if there is a no Brexit deal, that could cost in the region of $103 billion to the British economy, which again would have a very poor impact on the continent. Would affect a number of different areas, including aid to the continent and all these different things. So we certainly hope that there's going to be a positive outcome and that President Ramaphosa really taps into some of these long-term institutional investment opportunities. We're talking about $60 trillion globally, but yet we seem to be focusing on the development finance institutions that write, you know, much smaller checks and have a very different outlook on life. I think the world is changing with the technological development and the sort of the youth dividend that we have. You know, we certainly believe and hope that this is the time to change the nature of the relationship to a much longer-term, industrial-driven opportunity.
With China's major presence in Africa, do you think Britain can kind of nudge them out a bit?
I don't think they can nudge them out. I don't think they have the capacity to be able to do that. I don't even think that's the right thing for them to actually be able to do. If anything, they should be trying to find ways to lock into that pact. I think those days of you versus us, or I think that's really gone. I think it's all about leverage and strategic relationships that can basically optimize your capacity to be able to participate and benefit, and I think that's really the Africa that we want to see going forward. So it's a lot more strategic and integrated in terms of being able to unlock opportunity. Look, I mean, we're currently seeing at about 16% intra-African trade, so that's a real priority for us on the continent. But then, of course, we're at less than sort of 4% in terms of our share of global trade. So whilst there's all this protectionism going on in the rest of the world, this is our chance to really look within. You know, let's get this continental free trade area pinned down. Let's get our long-term institutional investors in to create that infrastructure, invest in that infrastructure, maintain that infrastructure through its life cycle, so we can really create those jobs and create those sort of trade gateways to be able to boost intra-African trade and optimize our position to compete more on the global trade market.
Speak about protectionism. What's your thoughts? I just want to get your thoughts on the U.S. is now working with Mexico, notwithstanding the war, but building relationships with Mexico now, and well, still talking to Canada. NAFTA is still up in the air.
Yes. Thoughts? I mean, look, we're going to be having a different conversation tomorrow after the President Trump spoke to Prime Minister Trudeau. The US have a strategy. I think the key issue here is, what is Africa's strategy? I think we've defined it. I think we've got some great leadership that's being provided on the political side. You know, the protectionism in some ways is an opportunity for us as a continent to really focus internally on putting that hospitable environment for business and trade in place, and really engaging the private sector, engaging labor in really how can we just take this trade growth in Africa, intra-African trade to unlock its real potential.
What about security on the continent? Is that likely to feature in talks here between Theresa May and Cyril Ramaphosa?
It may well feature on the agenda. I believe it will be touched on. But I think that's just the same. It's a global issue, so I think I'm hoping that it's going to be a more of an open discussion as opposed to a questioning discussion of why and how. But I do believe that, yes, I mean, it's important to business. We need sanctity of security around our assets and our workers and the opportunities.
It's about a conducive environment, isn't it?
Purely.
Hubert Danso, thank you very much indeed. Great insight. We really appreciate your time here today.
Glad to be here.
Hubert Danso is the CEO of Africa Investor Group. Let's take a bit of a break. We'll be back shortly. Stay with us.